What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Tesla stock, ticker symbol TSLA, on a variety of time frames in anticipation of the next trading day, Friday, May 3rd. All right, guys, Tesla stock here today, up big. It's up 2 cents per share, plus 0.01%. In regular trading hours, it's up quite a bit more than it was up intraday in the after hours, at least as of right now. That's likely to be different by the time you're viewing this video. Either way, take after hours with a grain of salt. That's, of course, being driven by Apple earnings. Apple's typically going to move the whole market. Just a quick little rundown. This isn't an Apple video. That one is coming, but just so you're aware, because it is moving Tesla. Slight beat on earnings. Overall revenue down 4%. iPhone sales fell 10%, but the big story is that they announced their biggest share buyback ever, $110 billion. Let's take a look here at this name here today, falling hard off the open and then spending really the majority of the second half of the day above that volume-weighted average price. Let's take a look at the volume profile. We'll do a quick analysis of that, pull out any bias. We'll take a look at the psychological levels, and we'll finish out with the expected move because we have an expiration tomorrow, so that's good to see. And, we'll pull out the directional bias out of the chain as well, see what the option traders are saying for which way this thing's going tomorrow. All right, so let's get started here on the 5-minute chart. Again, we're looking under the hood. We're pulling out bias. The price action's done. It happened. But that's not all the data we can pull. We can have a big downside move with very little bias. Bears, you, of course, want to see heavy bias. Bulls, you don't want to see any bias at all, and vice versa, right? But hey, listen, if you're new here, Tesla's a daily upload. It's the second video I upload every single day. So, my goal here is 10,000 subscribers. I hope to see you subscribe to the channel. I greatly appreciate it, and I will keep the Tesla videos coming. Let's take a look here. If we pull up, I really want to look at this fade and then recovery. Very contextual open. We saw volume actually hold a little bit higher, deeper into the day than what is normal. Usually we see a fade happen relatively quickly on most stocks, especially a stock like Tesla. But we did see volume hold a little higher. This higher volume green bar that we saw, that was a battle bar. You can see that big wick. That's going to be a lot of buys and sells happening on the same candle, so that pumps up volume, so I think we can kind of ignore that one. And then as we come into the intraday low, volume really starts to fade then. It's normal to see volume fade, but seeing that we did see volume hold higher than what is expected through these 5 consecutive red bars, that is a small amount of bearish bias, so, I think we have to point that out. It's pretty obvious. But then as we move through the day, volume just kind of slowly grinds lower and lower. It's interesting because throughout this region here, from kind of like 12:30 Eastern time, my charts are central, until probably about 2:30 or a little bit later Eastern time, we saw it pretty consistent where the green bars, we saw higher volume, and then anytime there was a red bar, it pulled back a little bit. Here's an exception, here's a slight exception, but that's a pretty consistent trend, which I would say is just a sliver. There's varying degrees here, okay, but just a sliver of bullish bias through the remainder of the day. And then the close was very contextual. This higher bar here, that's just a doji, right? It's a neutral bar, and that's rebalancing, which is why the volume is going to be higher, triggering on the close. So let's now take a look at the psychological self-fulfilling prophecy levels that we need to pay attention to because big money is going to be watching these. You can see my charts are very simple. White line is the 50-period moving average. The gray line is the 200-period moving average, and we have volume. That's all we need on this. Now you can see that today, struggling to... we didn't really give anything up today because we closed beneath the 50-period, and we reclaimed it in pre-market. You guys know after-hours pre-market reclaims and giving up areas. I like to see the intraday session. And you can see here we immediately gave it back up. Held the 200-period as support, which was good to see, but then rejected off the 50-period heading into the close. So bulls tomorrow, really simple. Any downside test of the 200-period on the 30-minute chart, going to want to see that hold as support. The ultimate goal is to rip upside through the 50-period on high volume, retest it on lower volume, small sample size betting on the breakback downside, right? And then boom, a bounce on high volume, confirming that as support, at least in the short term. Bear is really simple for you guys. Reject off the 50-period as hard as you possibly can. If we see a retest of it, and then the ultimate goal is to break downside through the 200-period on big volume, right? Low volume retest, and then high volume rejection, claiming the 200 as short-term resistance. All right, let's move on to the 4-hour chart here. You can see nothing really immediately relevant here on the 4-hour. The nearest thing is going to be that 200-period. It's about 5.75% away to the downside. That 50-period is moving upside. All I'm worried about here, unless these levels come back into play, guys, specific to the 4-hour, I'm watching the 50-period, right? That white line. Bulls, I want to see that eventually cross over the 200-period, not for the sake of the cross. The whole golden cross, death cross thing is very overhyped. just for the sake of getting another potential support level higher, because it's going to move more quickly than the 200 period. So I want this one to get above that 200 period and start getting closer to the stock price to have kind of more insurance closer to the price of the stock. Whereas you bears, you guys would ideally like to see that 50 period flatten out ahead of that 200 period, because you don't want that insurance. You want kind of like open skies to the downside, I suppose, an open fall, so to speak. The daily chart. This is going to be the most important. Now, you guys can see here on the daily, it's very obvious. A couple of levels. The 50-day moving average, we got close to testing that here today, and 177.50 to 180. Now, you guys know that 177.50 to 180, that's a level that we've been talking about for a while. It's a small channel, but it's a tight channel that I look at as kind of its own level. Okay, so if you're a bull, best case scenario, you want to hold the top area of that level, right, which is 180. We closed at 180.01 today, so we're testing the top area of that channel. Bulls, I want to see us bounce off 180 ideally, because it is a technical area. That 177.50 is kind of insurance on the 180. It's the bottom area of that channel. I'd like to see that hold if we test that. But if we give both of those up, the 50-day moving average is kind of right there as another potential support level, right around 174.50, around that area. But ideally, I'd like to stay out of all this muck if we can. Getting above 180 is, if you're a bear though, you have to get through all that and then ideally get down through the 50-day moving average. That puts you on the other side of that. And if you end up, treating the 50-day as resistance in the near term, that can set you bears up for a downside test of that 166.50 to 167 area. That's a technical level that I think is becoming even more obvious to more and more people. Implied volatility. Falling. Compared to the last couple of months, guys, it is low. Okay? The lower that goes, the more favorable conditions become to purchase new options, right? And but if you hold contracts that you purchased while IV was higher, that's going to be more and more IV crush. All right, so just something to be aware of. When IV is in extreme areas, high or low, it can present some opportunity. All right. Now, expected move. We have an expiration here tomorrow, so it's easy on us here on Thursdays are great because it's easy on us. We don't have to do any guesswork. There's no math involved, right? The expected move by tomorrow's close compared to today's close is plus or minus $4.68 per share. All right, that is quite literally the expected volatility being priced in by the market here tomorrow. So if you traded any of the May 3rd contracts here today, you helped with that pricing a little bit. But that is the one standard deviation expected move, expected volatility being priced in by the market. So there you go. There's the expected volatility by tomorrow's close compared to today's close. And that's a big part of the story, especially if you're trading options, since options are directly impacted. The price of them is directly impacted by the current and updating expected volatility, implied volatility in the market. All right. Now, what about directional bias? We can do that too. Let's finish out with that here. We have 1.84 million total contracts traded here today on Tesla. 1.05 million of those were calls and 787,000 were put. So we have a call side bullish bias here on the overall call put ratio on Tesla today. The short-term speculators, that 0 to 20 delta range, 457,000 calls, 279,000 puts. So relatively heavy call side bullish bias out of those short-term gamblers, the short-term speculators here today, right? That 0 to 20 delta, those are those far out of the money calls and puts, which on average do have a shorter expiration. Listen, if you're getting value out of the daily Tesla uploads, I ask you to do one thing and one thing alone. It's free, takes half a second. Leave a like on the video and get out of here and enjoy your day. I greatly appreciate it. I think we can. Yesterday we got let's shoot for 100 likes here tonight. I think we can pull that off. I appreciate it, and I'll see you guys in the next one.